Did you know that Warren Buffett, the world's most legendary investor, would be bankrupt in India in 4 years if the Indian tax was applied to him? So let me explain how. In any other job in India, whether you are a doctor, an engineer, or even कोई छोटा मोटा पानवाड़ी सही और a दुकानदार, the government will only take tax from you when you will actually make money or make some profit. ठीक है? But for a trader in 2026, this government taxes your own existence. It's like they are charging you a fee just for the oxygen you are breathing while you are also watching your terminal and investing your hard-earned money. The math is so broken now that FnO is no longer a game of skill. So in next 5 to 6 minutes, I will explain how it's a slow motion car crash for your bank account. So before we even talk about strategy, we should know that we pay 2% tax every time we trade in FnO through STT, GST or transactions cost, regardless of whether you win or lose. And let's take a moment to understand how high is this wall. That monthly 2% translates to 24% annually. Now let's just come back to Warren Buffett. The world's most legendary investor would be bankrupt in India in 4 years. His lifeline average is around 20%. Our Nifty does 12 to 14% returns annually. But the government has set your entry fee at 24% if you're an FnO trader. So think about it. Just to keep your capital safe to the end of the year with exactly what you started with, you have to be twice as good as the best index in the country, and you have to beat Warren Buffett as well. And if you make a 15% return, which is like really good, like in any other business, if you make a 15% return, you are a hero. But in this business of FnO trading, you will be actually down by 9%. And if you think that's bad, look at the people, those who've taken loans to trade. This is the real tragedy of 2026. If you are trading on a personal loan at 12%, your break even is not even 24% anymore. It's 36%. You need to hit a 3% return every single month just to keep your head above the water. When 91% of the traders are already bleeding out. So essentially you are running a race where the starting line is 5 kilometers behind everybody else. And the government is stopping you at every kilometer for collecting toll. And here is the funny part. The government keeps talking about the dangers of FnO. But have they really stopped banks from pushing these easy EMI loans? No, right? Because the banks gets the interest, the government gets the STT, and what do you get? You get the bankruptcy notice. So they are not really protecting you, they are harvesting you. If you are trading on debt, you are not an investor, you are just a high interest donor to the state. So let's stop calling this investing. It is a liquidity trap, plain and simple. It is not set by you, it is set against you. And the government has created this sovereign squeeze just for one reason. They want your money back in the banks. And why do they want it back in the banks? Because the banks are desperate for deposits. If you are betting on in FnO, the cash that the banks can't use cannot be lent out. So they have made the math of trading so impossible that you eventually give up and put your money back in the 3% savings account. They want you in the CASA Trap so that they can borrow that same money at 7% to fund their own deficits. This 24% friction isn't a mistake, it's a fence built to keep the sheep from leaving the pen. And people keep asking me, bhai, what's the alternative? And the bitter truth is that there might not be one. Sure, SIPs and ETFs are safer, but they are not giving you the 10x life-changing wealth that actually lured you into FnO, And here's the reality check. FnO isn't giving you the wealth either. It's actively taking it away. When you are losing 2% of your capital every month just to taxation, you are not even fighting the market. You are actually fighting the laws of physics. So you could be the world's best trader, but you cannot run the 24% drag. And I think that is the reality we all have to realize. The real alternative isn't another way to trade, it's realizing that for the retail guy, the FnO door has been locked and bolted from the outside. Kundi laga di usko. So everywhere else, the government is a referee. In India, the government is a player who owns the ball, owns the field, and takes 24% out of your energy just for showing up. And the government talks about risks, but they haven't really mentioned that the biggest risk to your portfolio is their own tax structure. So don't be a trader who just complains about his capital evaporating into government's ledger. Be the professional who sees that the game has changed. If you aren't a debt-free sniper or a 2-time a month trader who can somehow leap over that 24% wall, the only winning move is to get out of FnO trading. And before you think that this is how the whole world works, let me stop you right here. This is purely an Indian squeeze. Look at the rest of the world. In Singapore, it's zero capital gains tax. They want you to get rich so that you can spend the money in their economy. In the US, they have a 60-40 rule where your tax can drop to as low as 12% to 15% because of the value of liquidity. Even in the UK, they've made FnO exempt from stamp duty because they know traders keep the market alive. In Dubai, you keep 100% of what you earn. And in Hong Kong, the only entry fee is so low that a retail guy actually has a big fighting chance. They have discussed STT so many times, but then they never told you that the targeted strike is on your social mobility. So this is the real math, and these are the real implications for your family's future and your hard-earned saved money. Okay. So I would suggest that get out of the FnO trading today because the 24% wall is too big for us to scale. This was a heavy breakdown, but it had to be said, and there is no other way to explain anything better than by presenting the math. Okay, so stay tuned because later this week we are going to shift gears. We are going to be covering the AI summit in detail, and we will need to understand the imminent threat AI poses to our traditional jobs and what it means for us to pivot in this new era of intelligence. So don't let the taxman take your past, and don't let the AI take your future. Thank you for tuning in, and thank you for your time. So I'll see you the next time. Bye.